Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors. May 1st, just after the close. Busy week. Some of these days start to blend into each other and you don't know, can't remember if it's last Tuesday, next Tuesday, Wednesday, but John and I are here in the office. We have plenty of room, being that we're primarily siloed, the firm, working from our home offices. In terms of the market, some good things this week, followed off by a little softness late in the week. Real nice to see the continuation of small caps and mid caps rally through Wednesday. Not a problem that they pulled back, not a problem that the market pulled back. Remember what we discussed 3 and 4 weeks ago. This market is going to have rips and pullbacks. What we want to see on the pullbacks is where the demand lies. Don't fear the pullbacks. We have to accept them. We want to see where the demand is. Higher lows is what we're after. In terms of what we did in the portfolios this week, we did a couple of adjustments in both our U.S. strategy, which is a industry and sector strategy, and our tactical trend strategy. We did let go of some biotech. We peeled back just a touch in our U.S. strategy, and in tactical trend, we did sell half. We were at 10% position there. Listen, the sector's ripped close to 40% over the last 5 or 6 weeks. We had to feed the market there. We took it down to 5%. That's XBI. And we'll look to see how the market treats biotech. Maybe in XBI in the 82, 83, 84 area. That's what I'd like to see. Market never gives you what you want to see. But biotech got to be a crowded trade, got quite overbought short term, and we're going to see probably a little more pullback there. And that's what we saw in the S&P and the Qs today. If we look at the weekly momentum on SPY and the weekly momentum on the Qs, NASDAQ 100, it reached 100 this week, which means 100% of the securities in those two indexes were trading with a positive momentum. Very rare, extremely rare. And that's a good thing. Momentum, positive momentum, is a good thing. It means stocks are going up, means there's buying there. But at extremes, we have to respect an extreme. So this pullback is certainly not to be unexpected. We fed a little bit in on Wednesday, as I said, in the biotechs. We'll see next week where demand is. Everybody have a nice weekend. Stay safe, enjoyable weekend. John Musso will be coming on with a fixed income update.
Hi, it's John Musso. I am the President and CEO of Cumberland Advisors, and it is after the close on May 1st here at Cumberland. A little bit on the fixed income markets. Treasury is really a week where there was give and flow, but not much change. Ended up with the 30-year bond around 1.25 and the 10-year bond around 0.6, roughly where they started the week. Municipals, a little bit of give this week. Markets off maybe 15, 20 basis points. Why? Senator McConnell last week. We spoke about it. We thought he made reckless comments. We stand by that. But we do think there was some waning of the effect of that. So on Wednesday, we saw the first week in about 3 weeks, where we actually saw outflows from bond funds. We think that was temporary. You're already seeing Congress prepare a next round of stimulus with probably somewhere in the neighborhood of $500 billion to $1 trillion of direct aid to municipalities. We think that's really there to help out on unemployment claims. Hopefully as you come out of the coronavirus, those new claims keep going down. So the number of claims, which is skyrocketed, of course, the amount of new claims should start to slow. And that, of course, is a good sign. But there's no question that Congress has it in their power to help out the municipalities. So we think, even though munis were off a little bit this week, going forward, we think it's probably a good chance that munis start to rally, that yields come closer to Treasury bond yields over time, That has been our modus operandi. We think Treasury yields will probably rise at some point, and yields on other things like corporates and municipals come down. You're going to start to see some more deals come to market. Deals that came to market this week, good reception. Not great reception, but good reception. So 2, 3, sometimes 4 times oversubscribed. That is not the 7 or 8 times oversubscription we saw in the couple of weeks before that. But it is a sign that the market is certainly willing to accept new debt. The one thing we'll watch next week, state of Illinois coming with a very large deal. We know that Illinois is kind of the poster child for bad state government, has been for a while. It is not a credit that Cumberland buys for portfolios. However, we will be watching to see what the reception is, because they're coming with large, tax-free, as well as a taxable part of the deal. So to see what kind of reception they have and the yields that they come at will represent how much give there is in the market and whether they will accept new debt coming, because there will be new debt coming for issuers, whether it's in the short-term market or long-term market. We'll report on that next week. Everybody have a very safe and enjoyable weekend.